Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the intermediate series, class number 4, entitled Gaps and Chart Patterns. Ladies and gentlemen, how are all of you doing who are attending here live in front of these two computers? And if you're watching here from the recording, possibly you're on YouTube, or maybe you're here on our lovely intermediate site on reallifetrading.com. Wherever you are in the world, pleasure to have you here. Thanks so much for showing up. It's going to be an exciting night, and I am jazzed. I'm amped to be here. How's everyone doing? Richard, what's going on? Chris, my brother, what's up, man? Nikhil, wouldn't be a class without you. Gary, how's it going? From Dallas, Texas. Well, at least in the area. Yes, I'm wanting that. Hugh Wilson, what's going on, man? How are you? I'm doing fantastic. Zhang says I made it. Great. Linderman, how are you? Got it, got it. I love it. Beautiful, beautiful, beautiful. Okay, folks, well, we have ourselves a great session in front of us tonight. What we're going to be doing is we are going to be finishing out this class right here, class number 4, and we're going to be talking about gaps, candlesticks. We're going to be looking at the hourly charts, and we're just going to kind of really quickly, very fast, review a little bit about what we've been talking about in the first 4 classes. Let's get rock and rolling, shall we? First 4 classes, 3 classes, this is the 4th. We talked about Dow theory, we talked about accumulation, we talked about public participation, we talked about distribution. So right now this is just a random stock that someone requested I looked at before the class started, and we're going to be talking about chart patterns tonight as well. So let's just kind of look at this and type in a 3 on this particular stock if you can kind of see overall the phases of the market in this trend that we're looking at right now. Scott says it's going to be a balance between you, dinner, and Thursday night football. Hey, man, that's dedication right there, brother. I appreciate that. Very kind of you. Very kind of you. Thank you. Thank you. So, yes, we can see, right? So, this is right here. We got accumulation. We got public participation. We got some distribution up here. More bearish public participation, accumulation, public participation, distribution, public participation, accumulation, bearish public participation, accumulation. Now, again, if you're doing it big picture, so that's kind of like the smaller intermediate time frames. So if you're doing really big picture, you're looking at something like this. Let's do a different color, shall we? And we'll do blue. That's fine. So here's your accumulation. Here's a big accumulation right here. This would be a big distribution right here, something like that. So you can see all the patterns. We got a lot of patterns here on this particular stock. So really what we were talking about is the daily, the weekly. Those are bigger time frames. Those are what we're looking at. Then really the hourly and the daily are going to be the 2 biggest time frames that you're going to be using as swing traders, either bullish trades or bearish trades. Either one, the daily and the hourly are going to be kind of your go-to, with the hourly being a more zoomed in focus. I was talking with a lovely gentleman earlier today, and he was kind of like, Jeremy, I still don't know what's really the purpose of the daily chart then. Like, why even use the daily chart at all? And the analysis that I gave was the daily chart is kind of like your closet, right? You're looking in your closet and you're getting a big overview of everything that's in there. What do I want to wear? What do I not want to wear? And then, you get an idea of, okay, I want to wear my really terrible, ugly sweater. So you get the big picture view. And then once you get the idea of where it is, you locate the kind of clothing. If you have a closet like Scott with everything in perfect color formation on perfect hangers and sorted by type, then it's a little bit easier. But then if you come in here and look at an hourly chart, right, you get your individual setups, your individual clothing articles, if you will. I know that's kind of like a weird example, but you guys get the picture, right? Bigger picture, and then once you kind of frame your analysis based on the daily, you're going to zoom into the hourly and really use these for your trading. So we're going to be talking about that tonight. In fact, let's go ahead and just jump right into it. Go ahead, someone, and throw out a stock for me, any kind of company that you want. It doesn't really matter. Richard was first on the list, and he's choosing Activision. Beautiful, Activision. So we're going to look at Activision here. And what I'm going to do is I'm only going to put this amount of time here on the chart. So this amount of time we're dealing with approximately, let's see, we got 2006. So we're looking about a year or so. So if you had to give me a primary trend on this time frame, what would you say? Primary trend. So again, remember in class 1, we said the primary trend, in my opinion, is the longest view that you can put on your chart, or the longest view that you're looking at right now. So Scott would say bullish. Richard, what would you say? Nikhil, what about you, sir? Bullish. Jesse says sideways. Got another sideways. Got a bullish. Okay, so we're pretty much bullish to sideways. I would agree with either. I would honestly say bullish to sideways, because we are making higher highs and higher lows just from this perspective, you know. But if you said bullish or if you said sideways, I'm gonna give you the right answer, because it really could be both. Really could be both. So here's our daily chart that we got right here. So all right, we're looking at bullish to sideways. So what does that mean? If we're looking at bullish to sideways, that means we're probably gonna be looking for a buy low, sell high opportunity. So what I'm gonna do is I'm going to draw a support line right here. So we have a support resistance right now on Activision. Let's just kind of review, where did I choose this support line? I looked at that candlestick right there. That was it. That one little candle right there, that's the one I used to draw that line, and coincidentally it worked perfect with the worry bounce right there. You have a beautiful gap action, which we're going to talk about more tonight, and then of course you got some support resistance over here. So it just matched and meshed up very, very well. So we're getting on the daily chart, you're going to be using 2, maybe 3 lines at most, horizontal lines, because you don't want to get your chart too cluttered. 3 lines is good. You can go up to 5 if you really want to, but the overall goal and the objective on that is, the reason you want to come up with a fewer amount of lines is simply because if you have a line here, right, and then you have a line right there, you're going to be like, well, which one is the best one? Which one's the support resistance? Which one's going to trade to? So just get your lines in place. If I were to draw another line, I'd probably draw one up here and or probably down here somewhere. So those would be like the if I was going to add any of those two, I would add those two, and that'd be kind of about it, because that's kind of the price range that we're dealing with far away. So we got the daily chart. Bam, we got it. So now, hopping into the hourly, here's the hourly chart, and this is where we're going to stick to this hourly chart here for just a little bit, and we're going to talk about this one a lot. So let's kind of refresh some of our candlestick pattern analysis just for a moment. Ladies and gentlemen, what do white candles represent? White candles represent bullish candles. Bullish candles represent buying candles. So the transitive property, and it's been a while, but the transitive property would state that if a white candle equals a bullish candle and bullish candles equals buying candles, then a white candle equals a buying candle. Am I right, engineers? Is that the way the transitive property works? If A equals B and B equals C, then A equals C. All right. Yay, I did something. Dr. Linda Green, if you're watching this, you taught me something in calculus. I'm using it right now. So, Activision Blizzard. We're checking out the charts, and we're looking at some of these candles. So what this little space is in the chart pattern, so again, we're going to be talking about chart patterns, and we're going to be talking about gaps a lot tonight, this is something that's referred to as a gap, and that is spelled G-A-P. And anytime you see that, you do have to do in a falsetto voice, gap action. So that's kind of how you say it. There's the gap right there. So how is a gap created? It's actually very simple. A gap is created when the opening price of one day and the closing price of the previous day do not match. That's simple. So if Monday, a stock, doesn't matter what stock that is, closes at 38, well, in this situation, let's just be legitimate, okay, closes at $35.71 on a Friday, and Monday morning we open at $36 and a penny. So there's a difference of 25 cents. How does that happen? There's numerous ways that it happens, mostly because of news or buying from overseas, right? There are other parts of the world that are buying. You have the Japanese markets, you have the European markets, you have a lot of people who are buying that particular stock. Maybe some news came out, now it's worth more than it was when the market was closed. So there's a gap in price. What I want to talk about tonight very quickly is you can use something called extended hours to see a little bit more detailed information. Now, sometimes you won't see a lot of detailed information, but it will add to your chart a little bit more of insight, a little bit more intel. So notice this like yellow lines, these yellow blocks of color. These are the extended hours. These are when the markets are closed. And you can see that there are candlesticks moving and there are prices moving in there. In fact, right now, we're seeing a little bit of a, the stock is pulled back, but we're looking at a hammer candle right now. So if you turn on the extended hours, this is something that you're going to have to use. Let me rephrase, I apologize. You're not going to have to use this. This is something that you can use just to get more data on your chart. And you can come up with different support and resistance levels when you're using these extended hours. Extended hours does cost money. It's not free in any charting software that you're using. And you can use it in most brokers. You can get charting software in your broker like Thinkorswim or whatever. But yeah, you got extended hours. That's an important aspect once you really get an idea of, okay, your support resistance, where are things at. It's going to help you a little bit because once you have some extended hours, check this out, you'll notice that you can kind of sync up your another support and resistance line. So there's your support resistance line based on some of the extended hours info. Check this out, resistance, resistance, and look at that. It's becoming a little bit of a support right about now. So just interesting to keep in mind that extended hours can be used just to see kind of what's going on between market open and market close, right? Mark says no additional cost on Thinkorswim. Right, but it's you're absolutely correct. So if you have a broker, you're trading through the broker. So the broker is making money off of you, so they're going to give you the extended hours. If you have a separate charting software, totally separate, like TradingView or Market Analyst or NinjaTrader or TC2000, Motive Wave, Trade Navigator, any of these separate charting softwares, I do believe you have to pay additional for extended hours. Regardless, though, it's very hard to get for free separately from a broker. All brokers should have extended hours. And again, it's just another candlestick. It's just more candlesticks for you to see, more support and resistances for you to see to kind of sync up your information. That's all it is. So you can definitely use it. It is absolutely a good tool. I have been using it more and more recently. So if I turn the extended hours off, again, you'll see more information. You'll see kind of a very similar pattern, but you'll just get a little bit more information with the extended hours on. So now what we're going to be talking about is this gap, and we're going to talk about what this gap means. So a gap is a shocking event. Most traders in the world don't know why gaps are created or how they move. So if you, let's say you work with a guy named Joe, and Joe has shares of Activision, and Joe bought Activision here at this red arrow. So this red arrow, this is where he bought Activision. He got lucky. Well, not lucky. He just bought. He bought at $35.20. So he got excited about that. He bought at $35.20. Well, he bought on Friday. Monday morning, the stock opens up, and he is profitable. He's up like 8% overnight or something. And he's really excited about that. What does he probably do? More than likely, he probably sells. Yeah, he sells, locks in his gain because it was unexpected. He's really happy about it. And that's exactly what causes this little rotation right here on Activision. You open, and right when that opens, you see that lower wick? That lower wick began forming when sellers came in, and then buyers stepped up and began buying, creating that lower shadow. So check out this gap and how well it interacts with this old support, new resistance. So this little line right here, a little bit of a resistance line. Boom, boom. So old support, new resistance, that would have been a great buying location for your analysis. And, that's where he's getting in bullish. So Activision opens up and he's getting in. Let's check out this candle right here. And you'll remember I talked about this candle a little bit on the class 3. Does anybody remember, especially if you're brand new to real life trading and brand new to candlestick analysis, this candle is called a doji. D-O-J-I. Has the exact same open and the exact same close. It's a very indecisive candle. Very indecisive candle. And this particular candle just shows people are bullish, people are bearish, people are very mixed. People don't know what's going to happen. I love when I get a gap after a doji. It's a strong signal. If you get a really good doji and then you get a gap, ladies and gentlemen, have people made up their mind the next day about what they're going to do? And the answer is, yeah, more than likely. I mean, right, you get this doji, no one knows what's going on, and then this nice gap, this signifies that people are getting in. They've made their decision. They are rocking and rolling. So that's a great time to be getting in bullish when you have a nice gap after a doji. So earlier, I mentioned I was going to talk about chart patterns. So what we're going to do is we're actually going to talk about 3 chart patterns tonight. 3 of the most common, easy to spot, easy to trade chart patterns that are out there. They show up on the hourly charts, they show up on the daily charts. And again, since this is only the intermediate class, there's going to be more of this in the advanced section, the mastery section, and also when we do our trading rooms, you'll be seeing me draw these things all the time. But I'm going to talk about 3. These are 3 that are very common. You're going to see them in every single charting application. You're going to see them all over the place. These are the double bottom, which looks like a W, the double top, which looks like an M, and the Pinnate pattern, also called a small triangle. So those are the 3 chart patterns we're going to talk about tonight. And we're going to talk about how to trade those based on the hourly time frames. Okay? So again, in the first 4 classes, we're talking about the daily, right? That's the beginning section. Now we're into the hourly, and in class, the advanced sections, the mastery sections, which is right here on the website. Let me just show you where that's at. Here's the advanced sections under education. Click on trading mastered, and in these classes, you're going to be learning a lot about gaps. You're going to be learning a lot about Elliott wave, Fibonacci. There's a lot of cool stuff in there. You'll be learning about those in the very near future. So, what's a double bottom? I'm going to go ahead and draw one right here with a different color. Here is the double bottom right there. Now, if you're like, Jeremy, how in the world did you see that? Well, it can help if you're brand new to chart patterns to turn on your line chart and really you're just looking for W's. Is that a W? Yes or no? And if you don't know, ask a child because they'll see it. Like, yeah, it's right there. There's a W. Boom. I could write the word right now, win. W-I-N. Win. Winning. Yeah, so it's there. You can see it. So that W, also called a W pattern, is a double bottom. And what that is, literally how that is formed, is actually quite fascinating. Let me just kind of show you the sentiment of this double bottom pattern. What happens is a stock begins selling off. Everyone's scared, everyone's worried, they're selling. Well, what happens? At some point, people start to buy. They say, man, this stock is a really good discount. It was at $37, 2 days ago, and now it's at $36. So it's down $1. I want to buy this thing. So they get in, they get rewarded, and the stock trades higher. So what are they doing? They're starting to make money. So they get really excited about it, especially if they're a mutual fund or a hedge fund. Maybe they start selling and getting some profit. Or perhaps you had a trader who bought right there only to see the stock just go down lower, go down lower, and that person's scared, freaking out, upset, worried, and they say, man, if this stock just bounces a little bit, I'm going to sell. So the stock bounces, and then they sell, losing on the trade, but not losing as much as they would have if they sold lower. So those two sentiments together create another wave rotation down. They create another selling wave down. So that selling comes in, and what happens? Well, realistically, the people who bought the first time, let's call them the red traders, the people who began to buy right there and make money, if they bought there once and made money, what are they going to do? They're going to do it again, just like we talked about in previous classes. They bought once and made money, they're going to do it again. So that's what creates that double bottom pattern. They buy once, they make a profit, they start buying twice and they make a profit. That buying is what causes this gap to occur, and this gap gives you a really good opportunity to get in bullish. So here is your what's referred to as the neckline of a double bottom and a double top. So this is how oftentimes a pattern gets formed on a double bottom and a double top. You'll see this often. Now, keep in mind, it's not going to do this exactly every single time. It's going to do a variation of this, though, almost every single time. A variation of this. So in a textbook, this is how a double bottom plays out. You have a very, if not the exact same similar low, and then the stock trades higher, and then what happens? The people who bought here and who bought here, let's call them the purple traders, they begin to sell right there since they're profitable, and that selling causes a wave down, and then it comes into old support, new resistance, and the people who did not get a chance to buy, they saw the trade up. Let's call those the black traders. Okay, you see the move higher. They are missing out on opportunities. They're upset. The stock pulls back and they go, yes, this is the opportunity to buy. So they start buying. This is what is often referred to, and you'll hear me refer to this as the retest. I'm terrible at writing on a trackpad. Retest of the neckline. So this little part in the middle of the W, that's the neckline. So that's the location that you're looking to get in. So realistically, when you see a double bottom pattern, right, you see the W form. You see the W form on a double bottom pattern, and you're going to wait for some kind of rotation. Either the rotation will come down to the neckline, and that's where you get in bullish, or you'll see a rotation as it trades higher and higher and higher, and then it pulls back, and then you get in bullish. Either way, you're going to be waiting for that kind of rotation to get in. Now, the best part is some traders will ask me, guys, this is really, I mean, almost figuratively, not figuratively, literally $1 million question. When do you get in on a retest? There's a lot of videos out there that I have about that, but the answer is no one knows. The retest is wherever you want it to be. Like we've said in the last 3 classes in the intermediate section, find the area that you want to buy and then simply buy there. That's it. So oftentimes when I'm looking at a double bottom pattern like this, I'm buying right at this neckline. Boom, boom. When it breaks out, that breakout occurs, I have a limit buy order open in my broker that says, get me in. If I'm not already in, get me in this thing. Buy as soon as it pulls back. So here's a limit buy. And your stop would simply go below a most recent support. When did the bearish move stop? So right there, that's what be your stop is, because here is your doji candle. Since then, we have gapped up and we've continued higher. So that would be the trade that I would have wanted on this trade. Okay, so would I have gotten filled on this trade, ladies and gentlemen, if I had waited for that exact trade, if I waited for this breakout to occur and then it come back to a neckline, would I have gotten filled? Well, potentially no. Potentially no, because again, if I didn't see it until this giant candle comes in right here, if I didn't see it until then, and I was like, okay, well, I see it coming, now I want it to trade back down and then bounce, no, I would have missed this move. But that's okay, right? That is okay, because this is where the second pattern comes in. If I am missing a move, if I'm like, oh, shoot, it didn't retrace to the level that I want, now I'm missing it. What I do is I go look for a Pinnate pattern. A Pinnate pattern is just a triangle, a very small triangle, usually between 2 and 8 candles. And this is on any time frame. You can find Pinnate patterns and small triangle patterns on weekly charts, daily charts, hourly charts, 15-minute charts. You can find them on a bunch of different time frames. But you're going to be finding them. One of the terms is draw the line, and the pattern you will find. So what you're looking for is you're looking for candles that make higher lows like these. And you're looking for candles or patterns that make lower highs. And then from there, you just kind of draw the pattern. It's never, well, I shouldn't say never. Don't worry about it being perfect. Don't worry about, It must be perfect Pinnate pattern. Opportunity to recognize candlestick patterns must be absolutely perfect. No, guys, this is an art, not a science. More art than science. So I'm going to ask you guys, you tell me, could this be a Pinnate pattern? Yes or no? Could that be a Pinnate pattern? Yes or no? The answer after these commercials. Just kidding, that was dumb. Yeah, absolutely, man. That's totally a Pinnate pattern. Check it out. I'll draw it for you right here. Absolutely Pinnate pattern. Here's your higher lows. There's your lower highs right there. That's it. Pinnate pattern. Yes, sir. So, when do you get in? Fantastic question. You get in when the candle makes a higher high and a higher low. Relatively speaking, when the candle makes a higher high and a higher low. What does that mean? Okay, the higher high or the higher low. Literally means the candle needs to be, the low needs to be higher than the previous low and the high needs to be higher than the previous high. So let's take this candle right here with the red arrow, right there. That's a small little bearish candle. Did the very next candle make a higher low? Yes or no? Yep, it sure did. And you can mathematically, this is science, by the way. If you like the science part of trading, this is science. This is a fact. This is a numerical fact. The low of this candle was 36.23. The low of this candle was 36.25. So that candle did in fact make a higher low. Mathematical certainty. Do you guys like that? Do you like mathematical certainties? That's why I like Pinnate patterns, because they do offer mathematical certainties. You're looking for a higher low and a higher high. Now, next candle, the candle we're looking at right here, did it make a higher high relative to that bearish candle? So again, let's look numerical. The high of this candle is 36.40. The high of this candle, 36.39. Did we make a higher high? Yes or no? And the answer, nope. No, we did not. So would we get in bullish on that candle? Nope. All right. What about the next candle? Does the next candle, let's draw that one in purple, does this, messing everything up. Does the next candle, this guy, does that make a higher high and a higher low? Yes or no? And the answer is yes. Yes, it does. So that would be your entering candle. So in this situation, I would have had two trade setups. And I'm going to give you guys a real life example of this in just a moment. Real life? So the example is, check it out, Activision. You get your double bottom right here. I'm looking for a retest of the neckline. Looking for that to happen. Nope, didn't happen. So I'm like, okay, Snapdragons. I'm missing the trade. What now? Well, I'm trading, and I see a Pinnate pattern. I'm like, all right, there's the Pinnate pattern right there. What do I want to do? You have two choices. Choice number one, you take the breakout when it makes its higher high, and you put your stop right there in the gap. That's trade number one. Let's go ahead and do the math. Just as a reiteration, this will be the last time I do this in this section. We've beat this dead horse enough. If you have a $200 risk, that's your R. How many shares would you be buying on this trade? $200. What is your risk? Risk is $200. So do the math. 36.44 minus 35.84 equals 60 cents. 200 divided by 60 cents equals 333 shares. That's it. So now another pretty much mathematical certainty. I guess I can't say pretty much certain. Yeah, I guess I can't say mathematical certainty because that's. I'm trying to think of the closest mathematical. Anyway, you're going to have a really close, a really, really good idea of you're going to know how much money you're going to risk on that trade. So again, that's key, ladies and gentlemen, when you're taking a trade, how much are you going to make, how much are you going to lose? Because if you're a trader and you take one trade and you make $100 on it, you take another trade and you make $100 on it, you take a third trade and make $100 on it, you're feeling good. You're jazzed up. You're excited. You're up $300. So you're like, man, trading is no thing. I learned all my stuff from real life trading. I'm a boss. I'm going to throw down. So you risk $2,000 on the next trade. What happens? You lose on that trade, right? So you are a 75% winning trader. You have a win-loss ratio of 75%, which is amazing, by the way, and you're literally losing money. When in reality, had you just kept your risk the exact same on the fourth trade, you would be up 100, 100, 100, lost 100, you'd be up $200. That's risk mitigation, right? That's the key. So you got to just really keep that in mind. That's a pretty important fact. Risk mitigation is absolute fact. Very, very important to have in all of your trading. I've talked about that enough. All right, so on this trade, here's what a lot of people are going to ask, and I do have a class on this. I will link to that class in the description box below. If you're watching this on YouTube, and if you're watching this on our website, just hop over to our YouTube channel. Or, of course, you can just, click the video and go to our YouTube channel. To take the breakout or the retest, that is the question. Now, there is two answers to this. I'm going to give you the second answer that I alluded to a little bit in the video that I'm referring to take the breakout or the retest. The breakout can really, in this situation, only be taken if you're able to be by the computer. Right? Because right here, these candles, this is during market hours. This is the last 3 hours of the day. So this is from 1 to 4 Eastern Standard Time. So what if you're being an absolute hero to the world and you're working between those 3 hours and you can't be by your computer? Are you going to take the breakout? No, you're not. Because why? Why can't you take the breakout? Because you're not by your computer. You can't take the trade because you didn't even know about it. So what if the trade looks like this? And we're going in. Let me just hide all these drawings for just a quick second. Hide the drawings. And we're way over here, and this is the close of the market. What do? You're looking at the closing of the market, and you're like, okay, well, what I would like to do is I'm going to take and check this out. You guys are going to like this. I'm going to take the retest of that level right there, and I will place my stop right here. And I will do a limit buy. So I'm going to do a limit buy at the purple line, and that's when the market is closed. Right? That's when you're in your pajamas with your black bear slippers and you're sipping on your hot toddy, learning Italian, reading your leather-bound book about how to make money, smelling your house of rich mahogany because you're a big deal, ladies and gentlemen, is what I'm getting at. You're a big deal. So the market's already closed. You're looking at getting into the trade. You can already set this trade up with the market closed. It's like, all right, I'm going to get in on this pullback. This is where I'm going to get in, and I'm just going to set my stop here, and you can set it and forget it. So really, if you're taking the breakout, in most cases, you have to have the trade already set up, comma, or maybe semicolon. You have to have the trade set up, or semicolon, you have to be by your computer to take that trade. Otherwise, it's okay to take the retest, because what's worst case scenario? Worst case scenario, well, you actually have two worst case scenarios. Two worst case scenarios are you either don't make the trade doesn't trigger for you. Oh no, that's going to happen every day. Or the trade does trigger and you lose one risk unit, one R, whatever that R is. Those are your two worst case scenarios. Right? That's it. So if you had taken this exact trade, this was a cool little trade on Activision that I do believe Donald did take. So I had a trader who took a very similar trade like this. So he took the retest, and boom, he got filled on the lower wick of this shadow right here. He got filled on the lower wick of the shadow. Let's hypothetically say that we noticed this is a Pinnate pattern. We could have absolutely seen that because we were making higher lows and lower highs. Ladies and gentlemen, does this candle right here make a higher high and a higher low? Yes or no? So that would be the candle to take. If you're not in, you could get in bullish there as well and just ride that train. So ladies and gentlemen, that's the double bottom. That's the breakout of the retest. That's how to play gaps. We covered a lot right there. So let's look at this right here on Activision. Let's ask this question. Is this a Pinnate pattern, ladies and gentlemen, yes or no? Is that a Pinnate pattern? Yep. Okay. So it's a Pinnate pattern. We have another one. And another one. So we have two choices, right? Choice number one, we could take the breakout. The breakout will be right here. We could set our stop right there. That's a trade that we could set up tomorrow. We could place that tomorrow and set that trade up. Or we could go, all right, what I want it to do is I want it to break out. And then I'm going to come back and look at it while I'm at work. Or I could be by the computer or whatever. And then I'm going to get in on the retest and then bounce. And here's a two-letter word. If it actually retests. Sometimes it does, sometimes it doesn't. You have two choices, the breakout or the retest. So again, if you have, and in that video you'll learn, and I mentioned this the other day, if you have a bunch of white candles, you're going to be taking the retest rather than the breakout if you're going bullish. Same thing with the bearish trade, right? If you have a bunch of bearish candles in a row, you're going to take the retest and get in bearish before taking the breakout. So it's like, how much has that stock moved? Has it ebbed and flowed? Has it created a wave? That's usually what's easier to ask. If you look at a line chart, has it created a wave? And a wave is just a wave. Look, there's a wave right there. Has it created a wave? And the answer is yes. So if it hasn't created a wave, right, don't buy right there because there's no wave right there. Nikhil says, is there a software which can make Pinnate patterns automatically? We can notice them easily. Yep, there are. There's also softwares that do Morningstar reversals, one white soldiers, hammers. There's tons of them out there, man. There are plenty. There are literally millions of Pinnate patterns that occur every single day. That sounds like a TV statistic. Did you know that there are millions of Pinnate patterns that occur every day in the markets? TradingView does not have one unless you build one. You can build, if you are a programmer and you know how to build programming code, you can go in here into Pine Editor and build your own. Yeah. You can build whatever you want, man. I have a few traders who have built their own indicators, custom, coding, which I don't, by the way. You guys all know that. You can build anything you want, man. You can build cool little indicators that look like this, that don't even exist anywhere unless you know how to code stuff. Something like that. That gives you a little bit of an arrow that tells you when to get in bullish. If you're a true champion, maybe you can get an indicator that literally says, hey, get in bullish right here. So anyway. Scott's making fun of me. All right, so let's talk about the double top. So the double top, my friends, is the exact same thing as a double bottom, except in reverse. Now again, it's not going to look exactly like you want it to look at, but here's a double bottom, right here. That's a double bottom. Now this is a beautiful example. So before I draw it, ladies and gentlemen, yes or no, did we retest the neckline? Oh, heavens, yes. Get in that trade. Woo-wee! So if I had done a limit buy right there, I just crushed that thing. Destroyed it. Rocked it out. Trading one chart pattern on one time frame on one stock. Do you think that you could trade nothing else other than double bottoms on the hourly chart on Activision and make money? The answer is yes, you could. You'd have to be patient, but you absolutely could. Sure. Anything works in the stock market, ladies and gentlemen. Anything. Let me say it one more time. Anything works in the stock market, just not all the time. It's that simple. Anything can work. You can create any. I'll stop saying it. You guys get the point. I almost went down a tangent, but I didn't. Scott asked a good question. Now, is a perfect double bottom stronger than a double bottom where the second bottom is higher? This is a very good question. And I'm not saying this in a bad way, but I'm asking you a question. That's like saying what ladies are prettier, brown hair or blonde hair? You're gonna have people have difference in opinion. Hugh says all of them. Good answer. But you get what I'm saying, right? If you ask one analyst and you ask another analyst, you're gonna get a different opinion. My opinion is that if the second peak is higher, it's stronger. I have some analysts who say if you get the perfect double bottom like that, it's stronger. And I would say yes, if you get this and both of these are tweezer bottom patterns. Like if you get the exact equal low and both of them, like you get tweezer bottom patterns at this peak and this peak, yeah, but that just rarely happens. And then you get a double bottom that looks like this, which some people say is stronger due to divergence and things like that. So it depends on who you ask. In my opinion, I think if the second peak is higher, it's a stronger double bottom. The double tweezer bottom, close your eyes. Yes. Close your eyes and buy. It's a pretty easy trade. Let me know when you see one of those, and I'll take that trade with you. All right, so that's Activision. So here's a double top. Now, this one's not going to be perfect, but there you go. And this one right here did not retest the neckline. It got close, but it didn't quite get there. So that's a double top on Activision. So you just have two peaks. It's like you're drawing an M. There's going to be a few in here, but here's one right here. There's one right there that you probably would have broke even on. Here's another one right there that you would have made a little bit of money on. You could argue that to be a double top as well. You could make that argument. The market's been really bullish recently, just in the last few months, so it might be a little bit more challenging to find a double top. But here we go. Let's go back a little bit farther. Here's one for sure. Definite double top right there. There's a double top. There's not really one over here necessarily, but that's definitely one. Let's see here. Anything else? Double tops, double tops. Here's a double top right there. So again, a double top just kind of, it's one peak, stock comes down, another peak, stock comes down, and then it breaks the support, a short-term support. That's a double top. If you want to trade bearish, awesome. If you want to trade bullish, awesome. That's great. That is great. So there's Activision. That's an example in Activision. Type in a 3 if you remember us talking about GoPro in class 3. We talked about this one yesterday. For those who were live, if you're watching on the recording, it was probably the last example that we looked at, but let me just blow your mind here for a second so that you know how amazing real-life trading is. Ladies and gentlemen, check that out right there. We did it again. We did it in class 2 with Johnson & Johnson. We did it in class 3 with GoPro. We're talking to the penny, traded down to that level, and bounced. Cool stuff, right? Now, what's it going to do from here? I'm not sure. Maybe it goes higher, maybe it doesn't. I don't know. But here's your 5-minute chart, right? If you were day trading this or something, if you're day trading this, do you see a Morningstar reversal pattern? Yep. Nikhil says you were right about Netflix, which you mentioned yesterday. Thank you so much, sir. But you were correct. It was a nice little move. So there's GoPro. There is your Morningstar reversal after it bounces. And again, if you did this trade, which 2 traders did, and they're in class or getting analysis, they figured why not. So 904, they're in, and they have the stop, I believe, at $8 and some change. But either way, right? Here's back over here to the daily. Look at that. Look at that lower wick. Incredible. Is it going to work? Ladies and gentlemen, I truly don't know. But the best thing you can do in trading, as I mentioned numerous times, is you create a plan, you follow that plan, you mitigate risk. That's it. I could do analysis, and I do analysis for hours on end, Monday through Friday, in our live trading rooms, just like this. And when we do this analysis, we're doing it for you guys. So keep in mind, I can't trade everything in the world. And a lot of people, when they see the analysis, they're like, man, Jeremy, you should start your own mutual fund or hedge fund or something. It's like, well, that's not really my style, because then I'm going to be trading other people's money. And, when you trade other people's money, they're your boss, because it's their money. Without going down a tangent about money and freedom, without going down that road right now, all I'm getting at is, once you get to this point, ladies and gentlemen, the point of being disciplined enough to follow your analysis, you can create analysis for hours and hours and hours and hours and hours and hours and hours. Don't overwhelm yourself. Pick a few stocks, pick a few companies, pick a strategy or two, and then just follow them. Often, all the time. Just get good at that one thing. Like Tom Brady. I can't go a whole class without mentioning Tom Brady. He's a quarterback. How many teams does he play for? He plays for one team. One team. I mean, if he played for the Browns, they would at least win a game. He could play for the Patriots and then just suit up for the Browns and win that game as well. But he plays for one team. And what does he do? He's the quarterback. He's not the field goal kicker. He's not the punter. Well, he was once. He's not the running back. He's not the safety. He throws. So he does one thing on one team really well. You guys get what I'm saying? So if you really want to get great in the stock market, understand that you're missing out on millions of dollars every single day, because all the things out there are moving without you. Just get over that fact, because that is a fact. Focus on a few things, a few stocks, a few strategies, and then just do them over and over and over and over and over. That's really one of the highlights of my classes. I kind of focus in on that a lot. So again, I'm not in GoPro, but I know some traders who did take that trade. So here's the real life example that I want to give you. Let's go over here to Apple. And again, this is a daily chart on Apple. So we got a daily chart. Ladies and gentlemen, what pattern do we see here on Apple? This is as real life as it gets. What pattern do we see here on Apple? Double bottom is forming, correct. Has it broken the neckline yet? Neckline would be right about here. The answer is no. No, it hasn't. So guess what I'm doing tomorrow? I'm watching for it to break above that, and then I'm probably going to be day trading it. But could we plan for something like this to occur? Could we plan for something like that? Yep. In fact, we can do it right now. In fact, we just did. Boom. There's the analysis. So there's the daily chart. So the daily chart, bigger picture, maybe this doesn't happen for 2 or 3 weeks, but okay, you got an idea, 2 or 3 weeks, you're ready to go, you know what's going to be happening. All right, so that's Apple. But now let's go ahead and look into the hourly time frame, and let's see if we can look at some other patterns, and let's see, do we see a double bottom on Apple? Right now. Yeah. It's not pretty, but you can see one, right? You can see a double top over here, and you can see a double bottom right there. Entry right above this trend line. So as it was breaking bullish, right, you'll notice that it never retraced into that level. It never quite pulled back to that price. And yes, I did cry about that incessantly. Cried like a baby. For about 7 minutes, until I said, all right, cool, here's what I'm going to do. All right, so here's the double bottom pattern. It's breaking above the neckline. I see a little bit of a bearish candle right here. This is a Pinnate pattern. All right, so remember I said 2 to 8 candles, so there's the Pinnate pattern. So this morning, I got in bullish right here with the stop right here and crushed it. That was it. That was that day trade. Could we do the exact same thing tomorrow? Yep, same thing could be tomorrow. We look at it. In fact, I will be watching Apple to do that tomorrow. I'm going to keep an eye on Apple to break above this 112 price range tomorrow, right, which is a resistance. And we're going to have 2 choices. Here's the resistance. And perhaps on the hourly chart, we get this. Boop, boop, boop. And then on the daily, we get the big retest, and then we get the bounce. Does that make sense? So when you're piling these different time frames together, bam. What if you get a morning star reversal pattern right there? Beautiful setup. What if you get a morning star pattern right there? Beautiful setup. Do we get any morning star patterns down here? Yep, there's one right there. I mean, you get morning stars all the time. Mark says, has a nice pennant right now. Yes, it does. So here's a pennant pattern as we speak on Apple. So that's about as real life as it gets in regards to, I mean, this hasn't happened, but every single class we've done, we have chosen and shown stocks that I'm looking at getting in based on exactly what we're talking about tonight. Exactly what we're talking about. So let's go look at, someone give me another stock. Facebook. Let's go look at Facebook. Just looked at GoPro. So Facebook is, here's the daily chart. And I have a lot of drawings on this one, so let me just kind of hide all these drawings. Okay, so here's the drawings. What kind of pattern are we potentially getting on Facebook? We're getting a double bottom. Yep, getting a double bottom. We haven't formed it yet, at least on the daily chart. We haven't formed on the daily. But would you be surprised if I say, well, right here, there was a double bottom on the hourly chart, and there wasn't a great one over here, but it wasn't terrible. So let's hop into the hourly and see what that looks like. And there were a lot of traders who made money today on Facebook. Check this out. I got mine back mixed up. I meant to say that the double bottom was not great over here, but was flawless over here. That's what I meant to say. Check out that double bottom. That is like, that's what dreams are made of right there. Bam. Bam. Neckline. Did it come down to the neckline? Did it retest that neckline? Yes, it did. Absolutely. Now, again, I didn't take this trade bullish on Facebook. Just let you guys know. I can do this analysis all the time. I'm doing this analysis for traders constantly in the trading rooms. Amy made big money today on Facebook. Stan, Dean. I made money with another strategy that we talk about in the advanced classes. Donald made money on this one today. So that was a beautiful double bottom on Facebook. And this is going to be a scary, scary thing. But when you start learning about options and you start trading with us in trading rooms, that's a 300% return that Donald made in 2 days. Donald made a 300% return. He bought an option down here at the retest of that neckline for 25 cents and sold it today right, where did he sell that thing? Honestly, right here. He asked me in class today, do you think I should sell? And I said yes. He sold it for 86 cents. 86! So if you buy something for 25 and you sell it for 86, I mean, any way you cut it, that's a huge move. Scott says, how many contracts? I do not know. I didn't ask. Doesn't really matter, though, honestly. 1, 20, 15. I was like, as long as you can continue doing that. With Donald's newer to the trading room. It was probably a smaller amount. Just my guess, but I really don't know. I don't know. I would have done it with 20. I probably would have bought 20 contracts because it's only 25 cents of risk. Worst case scenario goes to 0. Chris says, how'd you know that was the top? Man, I can't tell you all my secrets, dude. Because then I'd have to charge for classes. No, I'm just kidding. I'll tell you right now. I scared you for a second. Good. That's what I want. Just kidding, man. I tell people my secrets all the time. Here's the daily chart. The daily chart, we have a 2 hundo simple at 119.66. 119.66. That was my target. And when he was asking about it, man, I mean, it was seriously, I'm not exaggerating. The high of the day is 154. I think he was asking me at 119.47, something like that. I was like, yeah, dude, you're right at that 200. His option expired tomorrow. So he was doing a weekly option, which we trade all the time in the trading rooms. And, yeah, I mean, he just nailed it. So really good trade, Donald. Congratulations. And we're seeing trades like that all the time. I get asked a lot, does this analysis work on an ETF? Oh heavens, yes. Oh jeez. So here's a quick question. This is SPY. Does this pattern remind you of anything that you've seen tonight? Does this pattern remind you of anything that you've seen tonight? Steven Tucker says, yeah. All right, tell me about it. We saw it earlier tonight. Ricky, you're absolutely correct. Al, you're absolutely correct. Who can read my mind? This is going to be the challenge. Who can read my mind? It's a mind reading game. You're all correct so far. Steven says, first pattern was the gap. Yes. Yes. Doji with a gap. That was what we looked at on Activision, right? About like what, 40 minutes ago. It's the exact same looking thing, right? You got a perfect doji. Cute little doji. You got a doji and then gap action. Right, nice little gap. Let me show you how this looks on an hourly chart. Let me just show you this thing. Ugh. This is going to make you guys upset. Because this is, honestly, I wish I was making this up because I would not be as upset if I wasn't. Since this is totally real, I'm a little bit upset about this. So here's the deal. What kind of chart pattern is this right here? I told you! Isn't this stuff awesome? It's a double bottom. Did it retest the neckline? No. Man, it did not. It didn't quite come down to it. I had a trade set up, I had a weekly option set up that was like right here. I was in like Flynn, and I would have destroyed that thing. We would have correct. That would have been 200, 300, maybe 400% return in 2 business days. There is nowhere else in the world. There's no other market that you can do that. I'm loving it. Ba-da-da-da-da. Justin Timberlake. I'm loving it. So yes, it got very, very close. Now, granted, I still took some trades on it. All right. But it wasn't the one that I wanted. It wasn't the perfect one. It wasn't the one that I really, really wanted to take. I was already in some options from another trade, so we made money on it. But now, again, I can sit here and cry about it. I can see that I missed that money, and that was a really, really good opportunity. A lot of traders did make some good money on it. But can I repeat this the next time? Scott says, what would have been your timeline for it to work? About 3 days. 3 days. Yep, you guys are all saying we can do this again. You're exactly correct. Exactly correct. In fact, Scott, that was the weekly options newsletter setup. So let me just, you know what? Since we're here, let me just show you that. I'm glad you brought that up. It's a very valid thing. Let me just show you that I'm not lying through my teeth. Because if it's the stock market, people already assume that I'm selling some kind of like pyramid scheme, multi-level marketing, fruit juice that makes you lose weight and makes your hair grow back and makes you get stronger, and you guys get what I'm saying. All right. So here's the dashboard. I'm sure you guys have all logged into your dashboard. Let me just do this again. All I did was I went to Real Life Trading. All right, let me log out real quick. RealLifeTrading.com, the best website in the world for stock market education. And I clicked on log in. Oh gosh. Oh, there's an HTML coding issue right now. You see like how it's like flashing? I got my formatting off. Right when I want to show you guys an example. Come on. There we go. All right. Sorry, my HTML coding. Anyway, I click sign in, right, with your email and your password, the same sign in that you guys created initially to do this. And here's your products, right? So you have the afternoon product, the morning product, professional trading through the hedge fund, and weekly options. If you've never purchased anything with Real Life Trading, you don't have any of these. I've always mentioned a million times, you never have to purchase anything with Real Life Trading. We will give you all the education you want. Just so happens that almost every single person live in this webinar is in the trading rooms. So thank you for that. But regardless, so here's the weekly options newsletter. This is the best product since fresh bread. And you can click on this. What we're going to do is every Tuesday, this thing comes up. All right, every Tuesday. You like that double bottom, huh? There's a reason why I talk about double bottoms, folks. I trade this all the time. You see, there's literally a double bottom Seriously, I sit up at night thinking about this stuff. I was like, I need to create an image that, whatever. All right, I'm done. I'm done gloating. So I click on edition 10. This is the one that came out last week. So we're going to scroll down, and this is the exact trade setup. I was like, hey guys, here's the update from last week. We're all out of our trade. We locked it in. Great try. Below is the new trade. Here's the trade I plan on buying. All the specifics, yada, yada, yada. Here's the stock chart. You guys ready for this? I'm glad I'm recording this. Here it is. I click the stock chart. Boom, shakalaka. There's the double bottom that I just showed you on SPY right there. There it is, in front of your face. Just so you guys know, I don't just teach this stuff. I'm like, yeah, I mean, it could be cool if it worked one day, but no, this is legit. All right, this is money in the bank. Shouty, what you think? Like this is solid stuff. So that was the trade setup. It didn't trigger. Okay, you're seeing behind the smoke and mirrors. Exactly, you're getting behind it. So then what I do is in every weekly options newsletter, I write this up and I say, I want this trade to trigger before market close on Friday. If it does not trigger by market close on Friday, I will cancel it. If it does trigger before close, I would fully expect to be out of this trade before the close on Thursday of next week. I'm very specific in all my weekly options newsletters because I have to be, because it's weekly options and it's weekly and it's options. And very specific, look at this. Entry, stop, how many contracts to buy, the target. I mean, you get everything with this particular product. Anyway, sorry, that sounds like a sales pitch almost. The SPY, nice and bullish. There's a lot of good information out there, ladies and gentlemen. I'm really excited to have you be a part of this class 4 for the intermediate section. I don't know, actually, yes, I don't know exactly what classes are going to be teaching next live, but you can always, and here's the most salesy I'm going to get, feel free to subscribe to our YouTube channel. I'm going to give you a really cool tactic. If you ever get bored, you can type in real life trading and then anything into it. I don't know, calendar spreads. Calendar spreads. You type that into the YouTube search and you're going to get a video, right? Real life trading, bam, followed by a topic and you're going to get a video 98% of the time. If you don't, let me know and I'll make that video for you for free because that's just how we roll. Our mission is to enrich lives. Also, you can hop over to our Facebook page. I don't know if I'm already logged in on Facebook or not. Okay, great. So you can hop over to Real Life Trading Facebook page. Maybe just click the like button, right? That'd be cool. We're brand new as a company. We're trying to spread the message and help traders in different languages. We have different languages on our website. I don't know if everyone's ever noticed that, but we are really trying to just teach people everywhere. So here's our education. We got French Canadian and we got Spanish right there. Spanish classes and French Canadian classes. One of my buddies in Montreal, Canada. So, ladies and gentlemen, spread the word on social media. We're here. We're legitimate. All we're going to ask is that you just simply take this information seriously because this is some of the most valuable, the quickest, the best info you can. I am getting overwhelmed every day by love and generosity and the emails that you guys are telling your friends, and we're seeing results. Traders are paying off their debt. I have personally seen 4 of my really, really good friends, my close traders, pay off all of their credit card debt this year. That's so exciting. Credit card debt or student loans, mortgages. I had one of my traders pay off his car in cash. Ladies and gentlemen, this information has results. It can change your life. Learn, study, grow. You'll become a better, more generous, more loving, more disciplined, more patient person. And after all, isn't that what life is about? To grow, to love, to give, to be generous, and to enjoy it. Ladies and gentlemen, you guys are amazing. The comment section in here is just blowing up and you guys are cracking me up. You guys are absolutely amazing. Thank you so much for being here. Thank you for watching this video. Go tell your friends. Hop over to our advanced section, beginner section. Go to our YouTube channel. Subscribe. Watch our playlist. Join the trading rooms. Whatever you want to do. We're here. We're enriching lives. You are amazing. Thanks so much for watching. And until next time, remember, love life, live life, and trade it. I'll see you later.